Hey guys, it's Dan here. In this week's episode, we will answer the question, is sales factoring a good idea? So in this video, you will learn three things. First of all, what is sales factoring? Second of all, what are the pros and cons of sales factoring? And at the end of the video, is it worth it? And if it's worth it, for whom is it? And what kind of business should not do it? That being said, ladies and gentlemen, let's go. So what does factoring mean in the business world, in the finance world? I will give you an example. It's going to be pretty simple to understand what sales factoring, which is the same by the way as invoice factoring or receivables factoring is. So let's dive into the example. Let's imagine here I am in an industry where when I sell an item, I do not get the money immediately, okay? It's not like e-commerce. Well, imagine I'm selling this bottle online, I'm not getting my money directly. Imagine I'm selling like 1,000 of these bottles to a client in another country, for example, and let's say you have agreed on payment terms that this guy will send me the money 30 days after he had purchased my 1,000 bottles, let's imagine. So in this case, I made my sale, so I made my revenue, okay, I sold 1,000 of the bottles here, but I agreed with my client that he's gonna pay me in 30 days, which means basically I will get paid for my revenues in 30 days, so I will have my cash in 30 days. So when you know a little bit about accounting, the difference between revenues and cash-ins in accounting, they are called a receivable or an account receivable. That means basically right now here I have a revenue but no cash right now, and then for 30 days I'm waiting, and after 30 days my client pays me, and this destroys kind of the receivable. But for that time I have a receivable, which means that my client owes me money. So now the question can be raised, how can I get this money quicker? So, and this is why, for example, factoring exists. So now let's dive into the example. Let's imagine here I don't want to wait 30 days for my money, because let's imagine I have sold for 100. I don't want to wait for my $100 for 30 days. I want to get them right now. So in this case, I'm contacting a factoring company, which is basically a company that will, I will sell my receivables to this factory company, and the factoring company will pay me immediately, but minus a fee. So instead of waiting for my $100 that will be paid in 30 days, I will sell my receivables to this factoring company, and the factoring company will not give me 100, but they will give me 100 minus a fee. Usually, of course, it depends on the riskiness of your business and these kind of things, but let's assume it's 2% for 30 days, okay, the rate. So in this case, I will get instantly on the same day where I do my factoring, I will get my $100, which is my revenues, minus 2%, so that would leave me with 98. So if I do my factoring, instead of waiting 30 days and cashing in after 30 days my 100, I will cash in today on day 0, but I will not cash in 100, but I will cash in 98, because of course the factoring company is also making money. Never forget, in finance there is no free lunch. So how does it play out at the end basically? Well, my client, instead of paying me after 30 days, he will pay the factoring company. And this is where you see how factoring works basically, because of course the factoring company has paid me 98 but gets 100 in 30 days. So basically they are kind of a bank in this case, because they are lending me money, and the interest rate of course will depend on the risk of my business. What is my credit score? What is my rating basically? Let's do a little pros and cons of factoring. What is good, what is bad? Well, let's look at it. First of all, let's start with the pros of factoring. As I just mentioned in my example, the entire idea of making factoring in the first place for you as a business is to get cash quicker, of course. You don't want to wait 30 days to get paid for your order, right? You want to get the money instantly, or much earlier than expected. So that's the big pro, of course. And that means, of course, if you get your money quicker, it improves your short-term cash flow, which is a very nice thing. Then, of course, as I just mentioned earlier as well, you are not chasing the money from your clients because you already have it through the factoring company, okay? You are not dealing with your client anymore when it comes to invoicing, getting cash and all that stuff, but you are dealing with the factoring company because you already have the cash, right? So that means no chasing down of invoices because you already have that cash. Then, of course, another very big pro is that you keep control of your business. What does it mean? Well, it means if you do like a normal loan with a bank, imagine you're doing a mortgage loan or something for your home, for example, they will of course ask you for collateral. What does it mean? It means in the business world, for example, in the factoring industry, they will not ask you for collateral, so they will not ask you for a part of your business. You do not have to guarantee factoring through, let's say, 5% of your capital or this kind of stuff, okay? So you still keep 100% of your business, and no matter what, there is no collateral used in factoring, but of course there is the fee which covers the risk for the factoring company. So now let's move on to the con side. So on the con side, we have some pretty heavy duty stuff. So let's jump into it. First of all, factoring is extremely expensive. As I just mentioned earlier in my average scenario example, usually a factoring company charges between 1 and 3% for about 30 days of factoring. That means let's imagine average 2%, right? So they charge you 2% for 30 days, right? That means if you convert it and basically multiply it by 12 months, that gives you a 24% interest yearly, which is absolutely phenomenal. That's in like credit card debt territory, you know. So that's hugely expensive. The reason for that is basically, of course, they do not take any collateral on your business. So the only way they can make sure that their risk is covered is by charging you a pretty nice fee, of course. Then the second problem is when the client doesn't pay them. Because as I just mentioned in my example earlier, once the factoring company is involved, the money, your client doesn't owe you directly the money, but your client owes the money to the factoring company. But if the client doesn't pay, there are some kind of back clauses, and that's the big problem, because first of all, you will pay an extra fee for the factoring company because it takes longer for them to get the money and all that stuff. And second of all, it means, of course, that you also have to chase the invoice. You have to tell your client, please pay my factoring company and all that stuff. So basically, in this case, when your client is very unreliable or pays very late, factoring is definitely not a good option, because of course it will first of all cost you a fortune, and second of all you will lose a ton of time chasing the client, and that's basically destroying all the value that you have gained in the first place, right? All the time you have saved in the first place. And then of course it can also confuse especially bigger clients, because bigger clients will ask, well, why do I have to deal with the factoring company now? Why am I not dealing with you? What's going on? Do you have some business troubles? Or why is there a factoring company coming to us and is claiming invoices and stuff like that? So it looks a bit shaky when you are when you are using factoring, unless you are in a very specific industry where it's completely normal. But usually factoring is a bit of an alarming sign. Why are they using a factoring company, you know? So and yeah, it can really confuse your customers basically, and that's the thing. You never want to be in a bad argument with bad image for yourself with your customer, obviously. So now, is it worth it, and for whom is it? Is factoring worth it, and maybe if it's worth it, for whom is it? Well, my clear answer in this case, I would say it's not worth it. And all the companies I have worked for several companies as a financial analyst or treasury analyst, we had a lot of offers from factoring companies, and we always turned them down, because we are kind of in a good shape. We were like retirement home companies or biotech companies, media companies, these kind of things. Now I will tell you why we turned it down usually. First of all, it's extremely expensive. As I just mentioned, about 24% yearly. So there are much better alternatives, especially if you're a healthy company, okay? So first of all, maybe look for overdraft facilities. What are overdraft facilities? It's basically on your personal account, you would be able to go negative, right, on your account. This you can do it with most business accounts, with business banks, if you talk to them, of course. It's called an overdraft facility, and they will of course charge you for that, but it's gonna be a fraction of the price here. Why? Because banks, when they're in a relationship with you, they already have some kind of collateral related to the loans. Okay, so that's a very important tip in my opinion. But even before you are looking for overdraft facilities, because you have cash needs, well, think about the following thing. Why do you have cash needs? Well, maybe you have to rediscuss the payment terms with your clients, because your clients, imagine in your industry, people pay after 30 days, and let's say you have 45 days with your client, maybe you should renegotiate. You say, no, it's not 45, the industry average is not 45, it's 30, so we need to talk again, you know. Especially if you're in a strong position with a client, you can definitely negotiate payment terms, which is super important for your working capital and your cash conversion cycle. And of course, especially the fact that you are paid earlier and that you manage your costs better and you pay later maybe, or on time, not early, will help you to improve your working capital. So all these things sounds a bit complicated. I made two very specific videos that I'm showing you right now. One about working capital and the other one about cash conversion cycle. Both are super, super important if you work in finance, if you're planning to launch a business. If you already have a business, that's something you just gotta know almost by heart, okay? So in my opinion, that's super important. So think about these alternatives before you think about factoring. And of course, there is also the bad image of factoring, because think about your client. Imagine, why me as a client, why do I have to deal with a factoring company now? It's a bad image for the company who is using factoring, okay? Because it means it's kind of a shaky company, maybe not run so well, what's going on, you know? So bad image for you. But of course, you should use factoring, well, if you cannot really avoid it, okay? If you are in a business with huge seasonality, or if clients pay you super late, well, then maybe it's worth considering, right? I remember we were working with Italy, for example. We did factoring sometimes in Italy because clients pay you after 6 to 12 months sometimes, so that's kind of crazy, you know? So seasonality can play a big role, and of course a crisis. I mean, if you're a hotel in 2020, you know what I mean. So that's so in my opinion, factoring is kind of the last straw if you have no other options. But if you have other options, make sure to check them out. And at the end of the day, it's all about working capital management and the cash conversion cycle. That being said, ladies and gentlemen, I hope this was useful. Don't forget to like and to subscribe. It takes me about 6-7 hours to produce such a video with research and cutting and stuff. So I would love you as a new subscriber. If you like that kind of stuff, I post once a week every Sunday. If you like corporate finance, market finance, you know where to find me. Same name on Instagram, Stan the Finance Man, if you want to follow me there. Enjoy your week. See you soon, guys. Stay smart, stay safe. Bye-bye.